Hi, welcome back to the channel. In today's video, I'm breaking down CBDCs, central bank digital currencies, what they are, why governments want them, and more importantly, what it means for you. So, like most people who are interested in money and finance, I listen to a lot of podcasts and watch YouTube videos. And a couple of years ago, I was listening to a podcast from a financial guru as I was driving down a motorway in my car. And the host of the show started talking about CBDCs and how they were going to be forced on us and why it was such a disgrace. So my heart sank when I heard about how governments will use them to control the population. Then the host said we need to resist these digital currencies, but then went on to talk about hard cash and crypto. So since that podcast, I've heard a lot of doom and gloom on online platforms and I became afraid. Then it struck me, they want me to be afraid. These platforms are promoting gold and precious metals, cryptocurrency vehicles, and other products. So they promote fear to increase engagement. When talking to other people about CBDCs, usually people have never heard of them. And I realised that although I'd heard of them and I didn't like them, I didn't really know what they were. So I decided to look into it so I could know the enemy, so to speak. And this is what I found out. Hopefully you're going to find it interesting as well. So firstly, what are CBDCs? Well, before I explain that, it might be useful to explain the types of currency that we have now. So CBDCs will be coming along, central bank digital currencies. We have cash, physical money. We have commercial bank digital currency. So that's your online bank account, bank transfers. Then we have cryptocurrencies, things like Bitcoin and Ethereum. So a central bank digital currency will be a currency of money that's issued by a central bank, just like notes and coins in your pocket. But just like money in your bank account, which is issued by commercial banks, it's going to be digital. So the main central banks are the Bank of England, Federal Reserve and the European Central Bank, although there are over 200 central banks around the world, all of various different sizes. A CBDC would be different to cryptocurrency such as Bitcoin because control would be centralised. Like cash and your bank account money, CBDCs are also fiat currency. Basically what that means is it's wished into existence. It's not real, it's not backed by anything physical such as gold or silver. CBDCs would be backed by a sovereign guarantee though, which means that it will be the responsibility of the government to assume liability for it. What that means is the buck stops with the government. I've got a useful table, there's a link in the description, and as you can see the 4 different currencies, none of them are perfect if you want safety, anonymity and control. However, if you have a combination of all 4, then I think you've got all bases covered. So why are they coming? Why do governments want central bank digital currencies? Well, the Bank of England states, we think it could help us maintain trust in money and protect our financial system, while also improving payments by increasing efficiency and helping innovation. So if you look at the Bank of England's website, it also shows that the motives are to keep up with digital trends away from cash and into new forms of currency. CBDCs would increase safety and enhance payment efficiency, but they are a way of maintaining control over financial markets, and people worry that it's another way of governments prying into our business. However, as responsible entrepreneurs that we are, we will take an honest look at them and how they will affect us and how we can use them as an opportunity. So what does this mean for entrepreneurs? Firstly, faster and cheaper transactions. Depending on the design of the system, transactions could be instant versus normal bank accounts, which are quick, but there can sometimes be a delay. So this could mean we have real-time payments 24/7, just like cash payments. However, it's got the advantage that it's remote. The cost of each transaction could be very low. Again, this would compare to bank accounts where there's often a moderate fee for businesses or wire transfers. It could also affect global trade and foreign exchange, as cross-border payments could also become instant and cheaper. So forex businesses and international payments may need to adapt. There'll be increased traceability, so every transaction will be traceable. This would have the benefit of reducing fraud, but also increasing scrutiny. Taxes and financial reporting would be automatic, and we're already seeing this in the UK. So there'll be less room for grey area cash transactions. Number 3, the potential for surveillance. Governments may have visibility into all financial flows, and much of the current resistance to CBDCs comes from the fact that potentially governments will know exactly what you're doing with your money. This may impact businesses who want to guarantee anonymity to their clients. And there are also fears it could open the door to a social credit system, where governments can nudge people's behaviour or punish certain types of purchases. People also fear that we could see automatic fines. For instance, you overstay in a car park and a fine could be instantly taken from your bank account. Number 4, CBDCs will also encourage new business models. Potentially you could have micropayments, so you could pay in pennies or a fraction of a penny. Now, micropayments are not viable at the moment because of the cost of the transaction. So, for instance, off the top of my head, let's say you could pay a penny to remove an advert from a website. You could also have programmable money, so CBDCs could be programmed to perform a certain function or self-execute. For example, you could have money that expires after, say, 30 days. You could also have a scenario where, let's for instance say, a parent gives a child pocket money and they can only spend it on certain things, and they could prevent them from spending on other things. You could also have governments issue money that could only be spent on certain things. The next area we need to look at is how a country is going to transition to a CBDC. Currently we're in the research or consultation. Central banks are studying the potential benefits, risks and design options. And the Bank of England states that it hasn't made a decision yet on whether to introduce a CBDC, but they're testing the feasibility of them. In the UK you would need parliamentary approval to be given, and I can see this being a political football. Public and industrial consultations would need to take place. So this would include commercial banks, fintechs or financial technology companies and businesses. Then once it's approved, the next step will be to run pilot programs that might run in a limited area or a limited sector. Next, you would need the legal and regulatory adjustments. So the Bank of England, as I said before, is in the design stage. So this involves reviewing what technology there is and what policies that are needed to be in place. There would also be a need to change the law to define CBDC as a legal tender. So not only would the laws around legal tender need to be reviewed, there would need to be robust frameworks put in place to make sure to protect privacy and security. And before anything is launched, Parliament would need to approve any launch. And there would also be a raft of public consultation on various public and private bodies, and I'm sure that everybody will want the say on that. Then you're going to need the technology infrastructure. There would need to be a national digital ledger created. This is where the digital ID comes into play, and I'll be talking about that in a future video, so make sure you subscribe so you don't miss that when it comes. Now this technology may or may not be blockchain, and companies are working on this now, but before any launch they would need to ensure that this is safe and tested. The last thing we need is something that's not safe and liable to hacks. We'd also need end user technology, things like the actual apps and wallets that you're going to be having on your phone. And again, these all need to be robust and tested to make sure that they're not liable to hacks. Commercial banks may act as intermediaries, so you're not dealing directly with the government, you're dealing with the banks as you normally do now. So they will need their technology put in place to make sure that they can handle this new currency. So the upshot of all this is the rollout won't be quick, and it will probably be phased in. So this phased rollout, I can see this being in small geographical areas or a sector of the population, maybe state pensions or benefits. The recipients of those might be the first people to get CBDCs. Then they would need to be able to spend that currency, so you would have certain businesses would be encouraged to accept that, and there would probably be incentives for them to do that as well. So once there's a period of time gone in place with this phased rollout, the CBDCs will be rolled out to the rest of the population. And that CBDC would coexist with cash and digital bank money. I'm going to talk about physical cash in a later video, but if you have stopped using cash, I would really encourage you to start using cash again. We need to keep physical cash in the system. So the bottom line is central bank digital currencies are coming. Not tomorrow, maybe within 5 and 10 years, maybe longer for some countries, but for other countries it might be much sooner. Now, as an entrepreneur and an investor, early positioning is the key. So hope for the best, but plan for the worst. Rather than resist the change, lean into understanding it first, adapt it quickly, and then help others to do the same. That's where the real leverage lives. So I'm going to be continuing this theme in the upcoming posts, showing you how you can adapt and thrive in this new age, which means keeping control, increased safety, and above all, your anonymity. As with everything, there's always an equal upside as there is to the downside. It depends on your outlook. And if you like this video, then hit the subscribe button. It really does help the algorithm send it to other people, and also make sure you get similar videos. Check out the newsletter as well, there's a link in the description, and I'll be sending out more information on this subject. And until the next video, stay positive, have a great week, and I'll see you soon.